Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I am your host, Ashutosh Garg, and today I'm privileged to welcome an entrepreneur, an entrepreneurship evangelist, a board member of The Brand Called You, and most of all, a very, very good friend from Gurgaon, India, Mr. Prajakt Raut. Prajakt, welcome to the show.
Thank you very much, Ashutosh. What a privilege it is to be back in the show again.
Thank you. Prajakt is a managing partner of Caret Capital. He's an entrepreneur and an entrepreneurship evangelist. He's an author of a book titled Starting Up and Fundraising. And as I mentioned, he's a board member of The Brand Called You and has been associated with The Brand Called You from day one. So, Prajakt, before we talk of Caret Capital and entrepreneurship, tell me about your own amazing journey.
Thank you very much, Ashutosh. Ashutosh, you introduced me as an entrepreneurship evangelist, and my journey and a better part of what I've done in my professional career has been about evangelizing entrepreneurship. My personal mission in life has been to instigate and assist 100,000 people to be job creators in my lifetime. And I believe that's an important mission for the country. Because if you don't create job creators, in my view, that's one of the foundational things that India requires. And as we go forward. So I started a printing business when I was 17 years old. My family continues to run that. Then I went into the advertising and marketing world. And towards the tail end, I spent about 10 years working on brands like P&G, etc. And towards the tail end of the first dot-com boom, that was around 99, I, along with a friend of mine, started a CRM solutions company, which I exited in 2004 to take a 3-year sabbatical to really get involved in what my area of passion was, which is I took a sabbatical to run the Asia office of one of the largest nonprofits fostering entrepreneurship called the Indus Entrepreneurs. And that was a time when I really dive deep into the world of startup, which is what my career has become ever since. I've then run the operations of one of the largest angel investor networks called the Indian Angel Network. I've run accelerator and incubator programs. And in between, I had also started a healthcare services company in which you have been deeply involved with and have been a part of and very supportive of. About 3 years ago, I launched, along with my previous investors, a supply chain focused venture capital fund called Supply Chain Labs. And over the last 3 years, we've evolved. We've changed the brand name from Supply Chain Labs to Caret Capital, CARET. Caret is when you raise something to the power of. That's called Caret. And in Caret, it's a thematic venture capital fund where we invest in startups that are disrupting anything to do with distribution, stroke supply chain, or mobility and smart mobility, including EVs, battery technology, etc. And the third foundational aspect of our nation building, which is employment, stroke employability.
Amazing.
These are the areas in which we invest in startups.
Amazing. So let's dive straight into Caret Capital. And I didn't know what Caret mean, but thank you for explaining that. Caret Capital is also a sustainability fund. So what inspired you to get involved with Caret Capital, and how has your vision evolved as it morphed from Supply Chain Labs into Caret Capital?
Ashutosh, both for me as well as for both my partners, the driving force is that India will become a $10 trillion economy in the next 10 years or so. And if we have to become a developed nation, from a developing nation to a developed nation in about 10 years' time, business as usual won't work. There are many things that will fundamentally need to change. For example, our rural markets, which are very small at this point of time, in a $10 trillion economy of India, will need to represent about $4 trillion, which is roughly the size of the Indian economy today. Now, the current distribution models, for example, are not geared for servicing deep rural markets. So one of the theses was, how do we improve the distribution of products and services into rural markets and products and services from rural markets into India? So that became one theme of what we were passionate about. The second aspect is about simplifying exports and imports, because if, again, India has to be a meaningful player in world economy, our exports and imports, which are currently very inefficient, need to be optimized. And the third is that unless all of the growth and development is equitably distributed, it is going to be a challenging situation for the country and the society as a whole. And therefore, how do you create more employability? How do you make people more employable and create or facilitate the creation of 10 million jobs is what our mission was. So if you think about it, while all of these three areas that we have identified have extremely strong tailwinds because of the overall India growth story. And of course, there is a tremendous amount of potential for wealth creation in those. These are also which we believe fundamentally will change India for the better. And that has been the driving force and motivation for all three of us,
Well said.
partners in the fund.
Well said. Well said. And what are some of the key factors you consider when you're taking a decision to make an investment in a startup which is focused on smart mobility distribution and employment?
Typically at the fund, the primary concern would be, or the primary criteria would be, is there significant or is there a reasonable chance that this company will create wealth for overall for the fund? Will this, if we invest a certain amount of money, is this likely to generate significant returns because of which the fund performs very well? Now, the criteria for all of this is, you start at the very beginning in terms of identifying what is the growth potential for that concept in that market. And then you drill down into whether this team has got a solid plan, a good product, and really the aspiration to really, achieve what it would. And because we invest in stages which are slightly early, there is usually not too much of history or data that you can rely on, and therefore it is the ability of the entrepreneur to really understand nuances of the business, to understand the complexity of what it will take. And more importantly, as I keep on saying often, we try to build history and certainly a lot of chemistry with the founders that we invest in. Because at the end of the day, it is the entrepreneur that you're really taking a bet on rather than any Excel sheet or a business plan.
Well said. And, I know you've made investments in several companies. Can you give me some examples of some of the innovative startups that Caret Capital has invested in?
Yeah, sure. I'll tell you a couple of examples where people are really disrupting or transforming the industries that they're operating in. Let's take the case of a company called Celsius. Celsius is a cold supply chain or a cold logistics company. Now, everybody knows that cold logistics in India is broken, inadequate, inefficient, etc., etc. And there is a reason for that, because cold logistics, infrastructure can only be used for certain things. If I put up a regular truck, I can transport bricks or phones or anything else that can, be transported. But if I put up a refrigerated vehicle, there's only a certain limited number of things that I can transport. And therefore, unless there was visibility of demand, nobody would put up an asset, as a result of which asset creation around cold supply chain in India was always inadequate. Now, here comes a company like Celsius. What they do is they put the demand and supply on a digital platform, as a result of which they're able to expose owners of these assets to potential customers, and as a result of which potential customers which earlier were struggling to service larger areas are able to sort of find vendors or service providers who will be able to do that. Over a period of time, what happens is this facilitates creation of newer assets. The new people are willing to put in newer trucks, newer cold storages and stuff like that. And in just about 4 years of operation, Ashutosh, this company has become the number 2 asset light operator of cold logistics operations in the country. In about 4 years' time, they've grown almost about 30 times.
Wow.
That's the kind of sort of scale that they have been able to do, because they identified a niche area, they identified a model that was very appropriate. It was a model which was asset light, which allowed them to scale exponentially, and they executed extremely well. That's one side of what we would call, say, for example, a services business. But I'll give you another example of a deep tech company, which is completely just a pure play tech platform. There is a company called Stylumia that we invested in, which allows fashion and lifestyle brands to do better demand forecasting. They use AI to tell, say, for example, a garment manufacturer, how many pieces of that particular color, of that particular shade, of that particular size, etc., they should make, and at the pin code level where they should distribute it. Now, what this does is this eliminates or significantly reduces what in trade terms is called dead inventory or unsold goods. A lot of these unsold goods otherwise were, of course, they were first going to discount stores and stuff. But in the world, you will be surprised, Ashutosh, 50 billion pieces of garments go to landfills every year. And the mission of Stylemia is to eliminate that wastage by helping these fashion and lifestyle brands to predict demand and distribute things better so that there is lesser wastage. And I'll very quickly touch upon a third company called Zindas, which is created by a very strong set of entrepreneurs again, which is simplifying exports for SMEs. And typically when you're exporting something, the number of channels, number of stakeholders that you connect with. Here, it's almost like somebody picks it up and gives it to your destination, everything controlled digitally with a thing. Now, the reason why we are excited about this company is because the vision of this founder is to create 10,000 businesses and enable them to export worth 100 crores each. Now, if you think about all these three examples, are companies that have significant tailwinds for value creation, but at the same time will have a fundamental impact on the country itself and perhaps in the world.
Wow. And my next question, Project, is, that I know you've always been very fascinated and interested in technology. How critical is technology in the startups you invest in?
So I'll put it in two buckets. There are some companies like Stylumia, which I said, which are pure play tech platforms, and of course you can't, you can't imagine that business being run without tech heavy, founders and tech heavy teams and stuff like that. But then almost all other businesses, operating businesses, there are businesses which we've invested in, which are doing rural distribution, for example, and stuff. Now, those businesses or warehousing businesses or logistics businesses and stuff, those businesses are pure play operating businesses, but the lever that they have is the technology enabled efficiencies. For example, in logistics, earlier in the absence of technology, a lot of people would use what is called contract. In the sense, I would have with logistics players, I would have 3 month, maybe even a 1 year contract in terms of every week, 3 times I want this tempo truck, whatever coming in these many places and going around. It's almost like, say, for example, if I had to go to the airport, if I had to tell a local taxi driver to come the next day, he would charge me a certain fee. But if I were to do spot booking, which is using an Uber, or an Ola, it would cost me much cheaper because I'm doing what is called on demand. A lot of technology allows existing, sort of operating players to leverage these kinds of efficiencies and therefore have significantly higher profitability than traditionally run businesses, and of course be able to scale up a lot better. So technology, whether you're a technology heavy business or a technology enabled or an operating business, technology allows you to get that extra lever to deliver significantly better value to the end customer.
Very interesting. Thank you. And Prajit, what are some of the challenges you face when you are investing in sustainability focused startups?
I think, one is, of course, the measurability of, how do you measure the impact that on the sustainability fund or any other impact matrix that you will have on that end. I think measurement is always a challenge, but things are improving. And as some of these things become mainstream, it will become easier. But I think investing, not just for us, but for anybody investing in early stage, the challenge is that you're almost, as I keep on saying, we are almost building the plane while we are flying along with the founders.
Yeah.
There is a vision, there is a plan, and there are some assumptions that you've made. And constantly you have to make adjustments as as the market responds to what you put out to be. Some founders are good at doing that. Some founders, sort of struggle with it. And our role as investors is to be supportive and to be able to provide them as much perspective and insights as we can to make their journey a lot easier than it otherwise would be.
Well said. So, Prajit, I'm now going to move to a few questions on startups in general. They will obviously cover questions relating to your work at Caret Capital, but also your vast experience as an entrepreneurial evangelist. What, in your view, are some of the essential building blocks of a successful startup?
And there are several things that would be required to make a successful startup. But at the very starting point, I tell people, identify an area that you're extremely passionate about, where there is a potential for or there is a need for that concept in that market. A lot of times people get enamored by a concept that they come up with, and then they try to build a business around it. Or often people who want to get into the entrepreneur often look at what are the tailwinds across which says, Acha, these days healthcare seems to be doing well, so let me focus on, or edtech seems to be doing well, or this or that, etc., etc., and they try to catch the wave going up. And while it's a good starting point, typically, because business will never be a straight line up, it is always going to be ups and downs and stuff. What I tell people is that if you do not have your heart into it, you will not have the tenacity and the perseverance to stick through the tough times. And therefore, choose a business in which you feel really, really excited, from your heart about. Because for entrepreneurs, I mean, for investors, for example, we are taking, you're one of the 20, 25, 30 bets that we will take in the tender. But for you, whether it's 6 months, 1 year, 2 years, 3 years, 5 years, whatever you spend in that, that's one life. And therefore, you need to be very, very clear in terms of what you want to do. And that I have seen the tenacity and the resilience and the perseverance to stick through tough times, backed by behind a concept that has high potential, as one of the most important ingredients for success. The other thing that I've observed is people who are able to articulate their concepts and stories better
Right.
have a significantly higher chance of success, because it's not just about telling the story to potential customers, but it is to every stakeholder, whether it is a partner from who you want extended credit, whether it's employees that you want them to give up a well-paying job somewhere else and participate in a dream. It could be anybody else within in a stakeholder. So that's one. And the third is the ability to build teams as you go along, recognizing that not everybody will have the same ability, and that everybody will, and therefore you will need to look at the core competence of that particular person and leverage that while making adjustments for the weak areas that that person would have. And the reason I bring this up is because often entrepreneurs are just so passionate and so driven that they expect everybody to deliver on that 10 on 10 on that entire thing, and it's impossible. You'll probably find a handful of people, but when team grows from 5 to 10 to 15 to 20, you have to learn to live with different varying skills and competencies of different people, and yet how do you blend that together into an organization?
Very interesting. My next question is, how important is mentorship for startups, and what should founders look for in a mentor?
Uh, Very important question, Ashutosh. Mentorship, I believe, is extremely important because not just for founders. I mean, there is a reason why large companies have boards and advisory boards as well, because everybody who's outside the, sort of the frame will have very different perspectives that you may miss in the, in your day-to-day work. A mentor, therefore, is somebody who's able to bring in nuances and perspectives that you may otherwise not be aware of, or be a bouncing board. And therefore, whether it is at the beginning of the journey where you're validating your idea, or you're building a pilot and proving the concept, or when you're, sort of scaling at each stage, I uh, I highly recommend to entrepreneurs to go and find mentors who will be their guides and sort of mentors in that sense. Now, at different stages of the business, people may need different kinds of mentors, but a mentor is somebody who is aligned to what the potential is aligned to the way that businesses or that entrepreneur or that team would like to take that business in, and is providing early guidance signals or early warnings to how that journey might work out. And in many cases, the mentor's role is also to support the entrepreneurs emotionally when the chips are down. So mentoring versus, say, for example, a consultant or an advisor, I see mentoring as a slightly different. It's a combination of both emotional support as well as advice that goes in. And in many cases, the mentor is as emotionally deeply involved with the concept as their own than, say, for example, an advisor or consultant maybe.
Great response. Thank you. So, time for two more questions. I want to come to your book, Starting Up and Fundraising. And you discuss in your book the investor's perspective. Can you summarize some of the key takeaways for entrepreneurs?
Yeah, first, the one thing that I tell every entrepreneur, and that to me, that as a takeaway from my book, is that a product is not a business.
Mm.
Often, especially in early stages, entrepreneurs tend to explain how good their product is. A good product is a necessary condition for success of a business, but not a sufficient condition for success of a business. Investors invest in a business that has the underpinning of a great product by great teams and stuff. But unless the complexities of what it takes to build that product, make that product, and take it to market and service customers is not well understood by the founders, it is going to be very hard to find investors to put their money in. And I'll keep my perspectives on early stage investors because that's my area of operation and that's my area of experience and expertise as well. In the early stages, none of the investors are looking for a perfect plan that is fail-proof or risk-free. There is nothing called risk-free. But it is important, therefore, for founders to identify what are the risks and suggest what are the assumptions on how they're going to mitigate it. Because early-stage investors, typically, along with the capital, will be able to bring in perspectives or expertise and the other subject matter experts who will guide the entrepreneur. So early-stage investors will typically work with the founders in doing that. So rather than trying to project an image where say that, look, I've got it all sorted out. If you go with the things and look, I've got these parts sorted out, but these are a little bit of gray areas. And I think if you can just put some little bit of oversight or advice onto this, I think collectively we'll be able to make it far better. The third thing that I tell entrepreneurs is to break up the phases of the business in 3, 4, the first level, focus on proving the different nuances and the aspects about the business, the product, the business model, pricing, customer segment, etc. And the reason I bring this up is because a lot of times entrepreneurs are in a hurry to scale up. And you can in some cases, but in most cases, it is prudent to really create the playbook, refine it well, and then take a pause and then, sort of replicate that playbook in a different manner. And it's also important in different businesses, it could be anywhere from 1 or 2 quarters to 1 or 2, years in getting that playbook right, but it's okay. But if you build a stronger foundation, the growth from there could be significantly higher. Now, there is no rule. There are, of course, no rules to it, but these are observations that I have seen. And Pat, when you're investing in companies, you're seeing hundreds of companies, if not thousands over many years, and then you have the vantage point of being able to find some patterns in what seems to be working and what doesn't seem to be working.
Well said. And my last question to you, Prajakt, as an entrepreneurial evangelist, as someone who has a vision to support 100,000 entrepreneurs, what trends do you see shaping the future of entrepreneurship in India?
I think, the way entrepreneurship is currently defined is a very venture capital view of what entrepreneurship is, which is a very, say, for example, in many ways, a Silicon Valley kind of a view. When you talk about entrepreneurship, you almost think of a technology-enabled startup, and the first port of call, therefore, will be a venture capital fund or an angel investor and stuff like that. And especially for India, I feel that entrepreneurship has to be defined as any legitimate business that anybody wants to do to his or her aspirations, abilities, and stuff. It could be somebody making handmade shoes, somebody who's, say, for example, doing a consulting business. And I therefore see a lot of micro entrepreneurship becoming a trend. And especially if you see, for example, an Ola driver is a micro entrepreneur.
Mm.
Somebody who's, say, for example, running a small fruits and vegetable shop is a micro entrepreneur. Now, today they might be a thela wala, but tomorrow, sort of as they start becoming slightly more organized, all of these will become micro businesses or mini businesses that eventually will be slightly more organized. They already started using technology, like, say, for example, a UPI or a Khata book, for example. All of these are tools that some of these small traders are using. So one trend I see is that a lot of businesses, which we typically don't consider as entrepreneurship, in that sense, we say it's not the business start, entrepreneurship we see as a startup. I think that will start happening. The second that I think is that there will be a lot of businesses that will now create solutions for Bharat, which is where there's a lot of action that will happen there. Think about 700-800 billion economy going to a 4 trillion economy in about 10 years time. Just imagine the potential that exists there in just organizing that part. At least in my view, these would be two strong tailwinds.
Yeah. And on that note, Prajakt, I just want to say thank you so much for speaking to me. It's always a pleasure to speak to you. Thank you for speaking to me about your own amazing journey. Thank you for talking to me about Caret Capital. And we went into a lot of aspects of Caret Capital, about sustainability, about investing in startups. Thank you also for talking to me about startups and entrepreneurship, and your book, of course, which is Startup and Fundraising. Thank you for speaking to me, and good luck to you.
Thank you very much, Ashutosh. Have a wonderful day. Thank you.
Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.